Yo, what is good, YouTube? We're back with another video. If you're not in the free Discord, go join it. It's the first link down below. Today's video, we are going to be doing lower time frame order flow, which is just basically reading which direction, bullish or bearish, the lower time frame is going to go, and we're just going to go over the 1 minute, because what you can do on the 1 minute, you can do on the 5, you can do on the 15, and the 1 hour, the 4 hour. What I consider the lower time frame is the 1 minute and the 5 minute. Right, the 15 minutes kind of that middle time frame, and then the 1 and 4 is your higher. Same with the daily and weekly. These I just use for intraday, and then higher time frame like weekly bias for the daily and the weekly. Intraday you're using the 1 and 4, and then 1 minute you can use it for entries, and I'm going to show you how in this video. So basically it's just going to be going over order flow and seeing how you can determine, is it going to be a reversal, continuation, and so forth, just based off the 1 minute and 15 minute key levels. Right, so what you're going to notice here is I don't like trading after 11, so I picked examples. All of these happened this week before 11, and none of them happened after. All of these examples are from this week, and we have a couple bearish and a couple bullish. And another thing you're going to realize is most of these contain an SMT. What is an SMT? It's a cracking correlation between two correlating assets. If you don't know what it is, go watch one of my other videos. I have videos on them. But you're going to notice that there's a lot of SMTs that you can frame trades off of. All right, so first example here, we're sitting on the 15 minute time frame on Tuesday, right? So what are we doing here on the 15 minute, right? Kind of just consolidating here during London's session, right? So London's right here, we're kind of just consolidating, and we come up and we take out this high, right? So we come up, but we're not displacing through it, right? So we come up, and this is basically a sweep of a high, right? You guys can see we're just wicking up here, and then what is here? All right, it's 9:30, and what did we do? Put in a bearish SMT, right? A bearish SMT. Now, what does that signal? Reversal, right? So what do we have down here? Equal lows, right? One low and a second low that has not been taken yet. Okay, so let's go down to the 1 minute, and we can see right here's the SMT, right here's our sell side, right? So we come up, swipe out this high, put in our SMT right here at 9:30, and what do? Form a change in delivery, right? So this becomes your negative order block. Right there is your key. That's your light bulb going off in your head saying ding, 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 hey, this is ready to go lower, right? Taps the change in delivery. Now the thing is, on this 1 minute chart, we put no fair value gaps in, except here, but I really wouldn't consider that a shorting point because it's so tiny, right? So what do? Well, we're gonna wait, but we're still bearish because we are so far above true day open, right? We're all the way up here. We've just been going higher and higher and higher. We have a bearish SMT at the highs. We have a sweep of the highs, so we're still looking for shorts, right? Now, what is a way that you can say, hey, I want to long this so then I can short it, right? Right here we have what? A sweep of a low, right? So let's go to the 15. What is it? A 15 minute key level. It's a 15 minute swing low, right? And what do we have up here? I almost forgot to mark this. A 15 minute fair value gap, right? So we have what? External to internal trading, right? We can just mark off this high because it's basically just this high, right? We have equal highs right here. So what can we do, right? Right here becomes our change in delivery. So plus order block, right? Comes in, or right here we close above it, taps it right here, expands higher. Now what do you notice? We're not tapping into this fair value gap. So if you had your limit there, you wouldn't have gotten filled. That's why I like order blocks more, because sometimes we leave these unfilled, right? And do we have a strong draw on liquidity? Yes. Equal highs, 15 minute fair value gap. We just took out a 15 minute swing low, right? And we go straight there, right? So after that, what do we want to do? Well, we're already bearish. Now we've entered here. Now you might be thinking, hey, well, we have these fair value gaps. Wouldn't that signify bullish order flow? No, because we are entering a 15-minute key level, bearish key level. We have an SMT at the highs. What would signify bullish order flow? If we break the high, that would say, okay, we're going to keep going higher. There's no need to go lower. We're probably just going to rip higher, right? But we have an SMT up here. We have a sweep. There's no reason to continue to be bullish. We have this 15-minute fair value gap. That was our key level that we wanted to see get tapped. What happens right here? Change in delivery off of a 15-minute fair value gap. Okay, comes up. We actually tap this upper one as well, so let's just mark that off right there. Taps that. What happens off of it? We put in a fair value gap, right? Comes up, holds this fair value gap, breaks lower, right? Right here, we have a little fair value gap that did what? Broke beneath a low, right? So we broke a low with a fair value gap. What happens here? We close above it. That's not saying go long, right? Yes, we have this fair value gap right here. It's supporting price for the time being. For the time being, it's giving us this retracement higher, right? What happens immediately? We reclaim it. Comes back up, taps it. Boom. That's actually where I went short. Right here. Geez, I need a drink. We come back up, we tap it, continues lower. We put in another bearish fair value gap, right? Now we run it a little bit, but what doesn't happen? A bullish change in delivery. Look at the bodies here. Wicks are coming up and wicking, right? But the bodies are not closing above it. We come down, we sweep sell side, right? Now the thing is, we didn't get to true day open, so I didn't get my full TP, but obviously I got filled out right there at sell side for some profit. But right there you guys see, SMT is the key. Now hold on, let me see, did we put in an SMT right here? No, we didn't. Right here we did though. Look, bearish SMT up here, bearish SMT. All right, so bearish or SMTs in general can tell you where the price is likely going to go. All right, so let's move on to the next example right here. Once again, 15-minute chart. Right, I just like the 15-minute because it can tell you where the 1 minute's going to go. Right, that's how you can identify key levels and then trade the 1 minute based off of it. What do we have here? 15-minute fair value gap that broke the high. What happens? Bullish SMT. Where? Right here. Right? It's that bullish SMT. Like I said, most of these, if not all of them, have an SMT. Let's head down to the 1. All right. So here we are on the 1. Let's put in that SMT. 15-minute fair value gap. All right. Now, what is this? Bearish fair value gap that broke lows. I'm not focused on this one. I'm focused on this one because this one's so small. Closes above it. This right here is your highest probability long setup up to these highs. Why this? It's because this is a bearish fair value gap that broke lows, took sell side, and entered a key level. What's this? Rejecting the bearish fair value gap. It literally just goes straight through it. This is your highest probability long. All right. What happens? We close above these two down closes. This becomes your plus order block. All right. You want to see bearish candles holding price to go higher that entered a key level. Right. So what happens? Comes down, hits the order block, closes above this candle, acts as your order block, continues to the draw on liquidity. All right. Now, what happens after that? Well, that's whenever you start scaling back up, right? You're not just going to be sitting on the 1 minute and measuring it, right? I'd say if you want to trade strictly the 1 minute, just use the 15 for key levels in SMTs. Then go down to your 1 minute time frame, right? So what happens here? Takes out a 15-minute candles range, right? So if you don't know what a candle range is, it might be a last video or 2 videos ago, I'm not sure, right? So what happens? Takes that candle's low, change in delivery, respects it. This is the most obvious fair value gap in this price leg lower. Enters it, right? And another thing you can do is use this as, hey, We're respecting bullish order flow. Bullish key levels are being respected right here. Closure above this. We enter back into it as an inverse. Pushes price higher. Right? And then we hit that draw on liquidity on the 15-minute chart. Right? And I'm pretty sure, I'm almost positive we put in an SMT right there. Right here. Oh, no. Right there's where we put in an SMT. So right here we put in that SMT. So if you didn't get your entry down through here, this down close, once we tap it, is your highest probability entry after the SMT is put in. All right? Let's head over to the third example. Let's head to the 15-minute. I'm not entirely sure about what this is. Oh. What is it? An SMT. What do we have? Internal liquidity. All right. So SMT. Right here is our SMT. Sorry. Oh, wait. Sorry. Up here's our SMT. Right here. Sorry, NQ took lows. I thought we took this low on the ES, but we did it with this candle here. So, my bad. But the trade still remains the same. So, let's go to the 1 minute. Right here, SMT. SMT here. What's the first thing that happens? We take out sell side. Bullish with a fair value gap. Fair value gap, broke a low, put in an SMT, disrespects it right here, and puts in a bullish fair value gap, so it becomes a BPR. We have a change in delivery. We have a retracement. What happens here? Inverse fair value gap, right? Do we have a strong draw on liquidity? Yes. Equal, or not equal highs. Internal range of liquidity, which lies up here. What happens, right? Comes down into the BPR, closes above the inverse with a bullish fair value gap right there. Comes up, teases it, right? But what's the likelihood of running equal highs? Very high. We retrace lower. Now you might be saying, oh, look, we're respecting bearish fair value gaps. We're going to go lower. No, the change in delivery doesn't happen until all the way down here. Change in delivery is your highest probability reversal, right? What happens? Takes a low. This down close will act as support, closes above it, runs the draw on liquidity right there, right? And then at 10:54, we get this massive down close, grinds up, takes the high, massive down close, and then we run lower, right? But that's basically it, okay? Right here. This right here is your order flow flip, this inverse fair value gap, change in delivery, taps into it, inverses this, with a fair value gap to the bullish side, teases buy side. Now I bet we respect this as an inverse. Yes, we do. Boom, takes liquidity. Okay, last example. Let's get out a replay. All right, right here, 15-minute on Thursday. What do we got? Probably an SMT because, yup, would you look at that? Every day this week, we formed, a high probability trade off of SMT. Right here, we had equal lows, comes down, sweeps them, puts in an SMT. This becomes your buy side. All right, puts in the SMT. Let's head to the 1. Boom. Boom. SMT. Boom. All right. So right here, what's this doing? Fair value gap that broke lows. Closes above it, reclaims it, but it doesn't take the low. All right. So it's okay. Change in delivery happens up here. Now the thing is, this day we literally just grinded higher at open. Now 10 a.m. though, right? 10 happens here. We're still going to remain bullish because we have this 15-minute fair value gap. Okay? 15-minute fair value gap right here. We come down. X marks the spot. Change in delivery. Order block. This can actually become your breaker as well. Taps the order block, continues up. If you didn't get an entry at this order block, right here, right? Why this? It's because it's a fair value gap that broke a low and it's overlapped with a bullish fair value gap. So this becomes your BPR. Comes in, taps it. Now, what was the draw for this day? All-time highs. Right? Taps it, continues up. What happens here? Closure above the closure above the down close. What happens here? Fair value gap that did what? Broke highs, right? It's the only fair value gap except up here, but this one's the one that's closest to breaking the highs, right? So you'd use this one. Then we deliver to all-time highs. All right? Now, right here, never filled it out, right? Never tap the change in delivery. So what do? You're just going to wait, right? The market doesn't just go straight up forever. It doesn't go straight down forever. You're going to get these retracements that you can play, like this order block continues up, this BPR continues higher, this fair value gap. Like, you just have to understand when the retracements are going to happen, like right here, because we're just not going to continue in one direction all day, right? But yeah, that's basically it. I mean, it's very simple to read these 1 minute charts, right? Now, if you want to go for higher time frame draws, it's going to be a little harder. You're not going to get 1 minute expansion straight there, right? Just like the 5 minute. The trades take longer if you're going for higher and higher time frame draw and liquidities, right? It's just how it is. So don't get on the 1 minute and think, okay, I'm going to take my entry all the way down here and we're going to go straight to all-time highs, and then you're going to sit through this retracement and be like, dude, this is stupid. No. You have to understand there's going to be retracements in the charts on some days. Now, yes, there are going to be those days where we just rocket in one direction, but that very rarely happens. Okay, so always wait for a retracement if you don't get your fill, like right here, right? Because this was hard to, like, there really wasn't an entry unless you took this inverse. But then if your roll is get out, if it closes back below or above, you would have been out right here, right? Yeah, you could have re-entered back here, but then you would have been like, dude, I don't know, I just kind of took a little loss. Like, if you didn't get an entry, just wait for the retracement, right? There's always going to be another entry or a reversal, right? It's just measuring order flow, right? Now, if you would have sat here and thought, okay, well, I'm going to play the retracement, right? So we take buy side. I'm going to take the retracement back down to this fair value gap, right? Because we take this 15-minute candle range, right? You can even mark off this candle. Oh, wow, we actually did take both sides of it, right? We take the high, close inside, comes down, takes the low, but still respects that 15-minute fair value gap. That's pretty cool. Right, here's the 15-minute fair value gap, right? What happens? We take buy side right here. Also that 15-minute change, or not change, candles range high. Sorry. We get a change in delivery right here. We get a fair value gap that did what? Broke the low, right? Comes up, taps it, hits the 15-minute fair value gap, and takes the 15-minute candle range low. Right? You can't be looking for a full-on reversal because we're overall bullish for the day. But there are times where you can say, okay, well, I think we're going to go lower for the time being. We got a change in delivery, fair value gap that broke a low, short to an obvious draw on liquidity, which is that 15-minute fair value gap. Right? And then hold runners to maybe get to the range low, which we did. I'm not saying we're going to get there every single time, but there are times we will. Right? So you can play it in both directions on the 1 minute. It's totally fine. But just know if you're playing in the opposite direction of the draw, it's going to take a little more time to work out. Like right here, it moved 40 points in 12 minutes. And then right here, we moved 60 points in 10 minutes. Right? So just know that you're not going to get you're going to get a quicker move if you're in favor of the draw. All right, but that's going to wrap up this video. I'm out of here. Peace. Oh, I didn't end it. I'm going to go eat my ice cream that I made.